Okay, let's have the last part. I guess this is the last part. So in the previous videos, we have talked about all possible transactions in the basic accounting. Pardon me with my voice because I've been talking for hours already. I'm so sorry. So we have the set of transactions, and after having the transactions, we are analyzing its effects on the accounting equation. A is equal to L plus C, and then ultimately we are making some possible journal entries as if we have those accounts already that we're using in the journal entries in the chart of accounts. Okay, so let's start with number 51. The same with number 48, since it is connecting to number 48. The number 51 is connecting to number 48. Let's go back to number 48. So number 48 is actually our company sold goods on account to Papa G Company worth 560,000 with credit terms 5, 10, and 30. The cost of such goods is determined to be 400,000. The shipping terms are FOB shipping point freight prepaid. The goods are already shipped but are still in transit to the buyer. The shipping cost is 50,000 and then periodic inventory system is used. So what changed in number 51? The goods are not yet shipped and are not yet in transit. So we sold goods to Papa G. However, in here the goods are already shipped and are in transit. In number 51, the goods are not shipped and are not in transit. So what will happen? Of course, in this case, since you have not passed the title to the buyer, there will be no entry related to sales. There is no accounts receivable, credit sales. Okay? And then the other one, as to the freight, it is said here that there is freight prepaid. So you have already paid for the freight. But since it's not yet shipped, meaning you have not paid. Alright? Okay. So that's for number 51. Number 52. The same with number 48. This is supposed to be 48. But the goods already arrived at the buyer's premises within the day. So if that is the case, since the shipping terms is FOB shipping point and freight prepaid, the analysis will be like this. Especially that the goods have already reached the buyer's premises. So if it reached the buyer's premises, you would recognize assets at 560,000 accounts receivable. Okay? Because the customer did not pay yet according to this number 52. And then we have to credit 560,000 for the revenue or sales. Okay? So the entry is debit accounts receivable 560,000 and credit sales 560,000. And as to freight, since the shipping terms are FOB shipping point, that means the buyer should pay for the freight. And freight prepaid entails that you paid for the freight. So that meant you have shouldered another one's obligation. So you have still to credit cash, this one, but you are to recognize accounts receivable from the customer. Okay? So that's number 52. Let's go to number 53. The same with number 48. But the company is VAT registered. So the 560,000 cost includes output VAT of 12%. So let's analyze it. And let's add something. And the 400,000 cost is purchased from a VAT registered is purchased, because I guess the cost is 400,000. Yeah, you sold at 560, the cost is 400,000. So you, for example, you have purchased those goods costing 400,000 from a VAT registered supplier also. What will be your entry? Okay? Let's assume that that is from a non-VAT registered. Or if you wanted to, okay, let's put it, let's not put this this koan, this twist already. So let's stick to the same with number 48, but the company is VAT registered. The 560,000 cost, 60,000 cost includes output VAT of 12%. What will be your entry? Of course, the entry will still be the same with the number 48. It's still this, because again, the goods are already in transit and it's owned already by the buyer because the terms is FOB shipping point. So you have to recognize already accounts receivable 560,000 supposedly, and revenues 560. Where is the twist? The twist is this output VAT. So what will happen? You have to get first the amount without the VAT. So 560,000 in order to get the amount without the VAT divided by 1.12. 500. So meaning the VAT is 60,000. So let's analyze on that. First, you have an accounts receivable of 500,000 and a revenue of 500,000. So debit accounts receivable 500,000 and then credit sales 500,000. Okay? That's it. Now, how about the VAT of 60,000? How are we going to analyze that? The VAT that you should pay for the BIR, the 60,000, will be registered as this one. First, as a seller, you have to collect that 60,000 from the customer. So you will have accounts receivable for the VAT, 60,000. So all in all, you have to collect 500 plus 60,000 from the customer. And then, instead of recognizing it as revenue, because it's not actually a revenue on your part, actually that money, if you can collect it in the future, will just pass, for example, from customer to you and to the BIR immediately. It will not stay in your company for your use. So that is actually a liability on your part. So that is a VAT payable. Output VAT is VAT payable. And remember, if you have paid an input VAT, it will become a discount on the VAT payable later on. Like, if ever you purchase something from a supplier and they charge you VAT of 20,000, so the VAT payable that you're going to remit to the BIR is only 40,000. 60,000 minus input VAT of 20,000. Okay? So, what is the entry? Accounts receivable, 60,000. And we have output VAT or VAT payable. But since we wanted to distinguish input VAT from output VAT, let's use output VAT. Okay? In the books or other authors, they are making this only one entry. They're going to debit one accounts receivable, but it's already 500 plus 60, 560. And then credit sales 500,000, and then another credit output VAT. It's okay. So I am just making this a little bit simple than that. So in the books, that is what we call as complex entries, whereby there are two debits or 2 credits in one entry. Okay? So that's number 53. Number 54, related to number 48. The customer returned half of the goods to the supplier due to the damages and incorrect items delivered. Again, we are just going to relate to number 48. We're not going to relate into other numbers, like for example, don't analyze the number 54 in relation to number 53 that there is already VAT, okay? Don't analyze on that. You have to analyze only related to number 48, because again, these transactions are independent from one another. Okay? So if that is the case, in here, where we are not yet VAT registered, the half of this is 280,000. So it's as if it's returned by the customer, 280,000, due to damages and incorrect items delivered. So what will be the entry? First, let's analyze. Let's copy this. So if your customer returned goods, of course, your asset will suffer. It will be deducted by how much? 560 is 280, the half. 280,000. The accounts receivable of yours will be deducted by 280,000. That's the result. And then your sales will be affected. You will have a deduction in the capital side of 280,000, which is what do we call as sales returns and allowances. Yeah. Sales returns and allowances, which is, if sales are revenues, these sales returns and allowances are contra revenues. So the normal balance of this one is debit, as if in your mind this is somewhat like an expense. Okay? Which is why in here, in the capital, there is a deduction of 280,000. So what will be the entry if ever? The entry is debit. Let's just copy sales returns and allowances. So we have 280,000, and credit, of course, accounts receivable. $280,000. And that's it. This is related to the merchandising. Let's go to others. Number 55 is all about making an entry for salaries. Okay? So if we have employees and there is a computation like this, as you can see, we have gross salaries of employees 300,000. We have less withholding taxes 30,000, less SSS 10,000, less PhilHealth 12,000, less Pag-ibig 3,000. The net salaries payable to the employees is 245,000. Let's put payable so that we will be able to have a proper entry. So the proper entry for this one is actually, when we analyze first, the A is equal to L plus C. What will happen is that you'll recognize the whole expense of how much. The whole expense is 300,000. The gross one. Okay? So, it's a deduction in the C. And the reason for that is salaries expense. Expenses in general. But, when we talk about liability, since this is to be paid, let's assume that all of these things are still to be paid. So we are gonna put on the liabilities also 300,000. But these liabilities of 300,000 is not lumped. There are different types of liabilities here. Like for example, since you have deducted withholding taxes of 30,000 from the gross salaries of your employees, you will have withholding tax payable. And if you withhold 10,000 for SSS, we have SSS payable, PhilHealth payable, and Pag-ibig payable. That is on the L. Okay? You get me? So this 300,000 is subdivided into these different payables. So that's it for the A is equal to L plus C. And as to entry, your entry will be salaries expense for the gross amount, which is 300,000 for example. And then the credit would be due to BIR. Due to BIR 30,000, and then we have due to SSS 10,000, and then another one credit due to PhilHealth, and then due to Pag-ibig, so how much is the due to PhilHealth? It's 12,000, and we have due to Pag-ibig 3,000, and finally we have salaries payable to the employees at 245,000. That is the entry. Debit salaries expense, credit due to BIR, due to SSS, due to PhilHealth, due to Pag-ibig, and then salaries payable 245,000. Okay? So that's it for number 55. Now, if you are going to pay this for example, the salaries payable, the entry would be salaries payable debit and then credit cash. Something like that. And the due to BIR, if BIR will collect, due to BIR debit and then credit cash. That's it. On the due to SSS, PhilHealth, and Pag-ibig, there is a twist. Why is it? In number 56, there is what do we call as employer share. So these amounts that were deducted from the gross salaries of the employees are the employee share. So SSS is what do we call as a retirement fund. So meaning both the employees as well as the employer are contributing to it. Okay? So as you can see, we have 10,000 here from the employees and 20,000 here in number 56 from the employers. Okay? So will there be a record by the employer on its shares on the SSS, PhilHealth, and Pag-ibig? Of course there is. This is an additional salaries expense. Okay? So what will happen is that when you analyze this, you will have somewhat similar analysis to this. Like, how much is this? 20 plus 12, it's 32, it's 35,000. 35,000 will be recognized as expenses, salaries expenses. And then, the counterpart is the liabilities. So, it's balanced still. Alright? And then, remember, this 35,000 here in the liabilities are actually liabilities to SSS, PhilHealth, and Pag-ibig. Okay? So, what will be the entry? Debit salaries expense, 35,000. There is no credit due to BIR. It's because there is no employer share for the taxes of the employees. So, we have due to SSS, Instead of 10, we have 20,000. And due to PhilHealth, 12,000. And due to Pag-ibig, 3,000. And there is no salaries payable already here. So that's it. So meaning, if you wanted to pay to SSS, you have to pay 10,000 plus 20,000 if these two are related. So you have to remit 50,000. So the entry will be due to SSS, debit, and then credit cash, 50,000. Okay? So that's it. That's it for number 56. Now let's have this number 57 and number 58. In some fundamental of accounting books, they are already using corporations. Okay? So we have here, the company issued 100,000 shares at 30 per share. So 100,000 times 30, that's 3 million. Okay? So what is that 3 million? Actually, the same with sole proprietorship, the substance of this one is that the owner invested 3 million from its own pockets, and normally the entry is debit cash, 3 million credit BBG capital. So it's the same with that, although this is for corporation. In this case, the entry, instead of debit cash credit BBG capital, the entry as to the effects first, so that we will be having the same pattern. Let's go for the effects first. The effects will be, the asset will increase by 3 million. And the capital will also increase by 3 million. Basically the same with owner's investments in the sole proprietorship. That's the analysis, right? So the only difference is the entries. Okay? So instead of having debit cash, it's still debit cash. Debit cash, 3 million. In the corporation, instead of crediting BBG capital immediately, in here we have an entry, an account known as ordinary share capital. Okay? However, it's only limited to the par value. What is the meaning of that? The par value is, first, let's talk about shares. A corporation is actually, the ownership of the corporation is subdivided into shares. Like for example, as BBG Corporation is subdivided into 1 million shares, something like that. So those shares of stock, the corporation will sell it to get money from investors. Okay? So the 1 million shares, if someone will buy 100,000 shares, he will become an owner, 10% owner of the corporation. It's just like that. Okay? So the point is, the corporation is subdivided, the ownership is subdivided into number of shares. Okay? Now, in here, you have sold the 100,000 at 30 per share. So, if there is 1 million available shares, 10% has already been sold. Okay? Now, on the selling aspect, there is a minimum amount per share that you can sell it. It is the par value. Okay? So, that's the minimum. So, you cannot sell each of the share at below 10 pesos. It should be 10. It should be 10 at least. Okay? Which is why this is good. You have sold at 30 per share. Okay? So, what's the difference between these two? This is the minimum, and this 30 per share is the market value per share. So, if the corporation becomes very popular, becomes very trustworthy to the public and to the investors, the market share will increase. Okay? So, that's the story between the par value, the shares, and this fair market value. Okay? So, again, instead of debiting 3 million crediting BBG capital in the sole proprietorship, you are to credit an account, ordinary share capital. But that is only limited to the par value. So 100,000 times 10, that's 1 million. So, as you noticed, it will not be balanced, right? So you have to credit another one so that it will be balanced. We have ordinary share capital, share premium. So these accounts are unique for corporations. So the balancing figure, if there is a debit cash of 3 million and a credit of OSC or ordinary share capital at par of 1 million, the ordinary share capital share premium is 2 million. That's the entry. Okay? So that's it for number 57. And also, we have related to number 57, the company paid cash dividends of 2 per share. So what is this? In the sole proprietorship, we treat it as a withdrawal by the investors. Okay? Withdrawal by the investors. So our entry is supposedly debit withdrawal and then credit cash. Basically the same like that. Actually, when you are going to analyze the A is equal to L plus C, it's very much the same with withdrawal. Like, if this is 2 per share and there are 100,000 shares, so that's 200,000, right? So, what will happen in the A is equal to L plus C? The cash will be deducted by 200,000 because of that cash dividend. And then, the capital will be decreased by 200,000. And the reason is dividends now, but in the sole proprietorship it's withdrawal. So it's basically the same. Did you remember the withdrawal? This is the pattern for the A is equal to L plus C transaction effects for withdrawals, right? The question is, what is the entry? In the corporation, the entry would be debit retained earnings. So this is another account. Instead of using withdrawal. Retained earnings, 200,000. And then credit cash. 200,000. That's the entry. So what is this retained earnings? In the corporation, the net income of the corporation will be stored here. From the very beginning of the corporation until now, or until the current period, it will be stored in the retained earnings. So that's the retained earnings account. Okay? That is not present in the sole proprietorship, because in the sole proprietorship, any net income will go directly to the owner's capital. Okay? So that's it for the possible transactions. I think I've missed 2 or 3, but nobody's perfect. So this is the overall possible transactions in the basic accounting. And if you wanted to know more about this shareholders equity, I guess I have already completed a playlist for this one. So you can go to my channel and select playlist and find shareholders equity. Okay? So if you learn, please click like, subscribe, and hit the notification bell. And hopefully, this will help you in your mastery on the journal entries and adjusting journal entries. Thank you and see you on the next one.